the Fed also just gave the okay to 30 banks to buy back their own shares. And in here, in this article on ABC News, Morgan Stanley plans to buy back up to $3.5 billion worth of their own stock now that the Fed has okayed this. And then Bank of America, $5 billion, and Citigroup, $8.6 billion. Well, that means 3 out of the 30 are planning on buying $17 billion worth of stock. Now, what do the other 27 banks have planned? Where is the stock market going to go because of this? Well, there's a financial sector index for the S&P 500. So this is the big banks here. And what we see is that currently it's back at 1997 levels. That's where the financial sector index was trading back then, 1997. So we're talking about the banking sector really going nowhere, and you can see that it had rallied up into 2007. But what's interesting here, the crash of '08, the financials started dropping before that crash. They started dropping in mid-'07. And so it was predicting the financial crisis of '08. They started dropping before the general stock market started falling off of a cliff. And so this being one of the predictors, the Fed giving the okay to these 30 banks to buy back their own stock, that will lift this sector, which is one of the major components of the stock market. The financial sector is one of the very large components of world GDP now, and a very large component of the stock market. And I've shown this chart many, many times. This is the St. Louis adjusted monetary base. So this is base currency, all of the paper dollars that exist or the digital bank accounts that the banks have at the Fed of the paper dollars, all redeemable in paper dollars. So it's the paper dollars that are in your wallet and stuff. But most of this from 2008, all of this stuff that was created here, most of that is in the form of excess reserves. You can see excess reserves were close to nothing until the crisis of '08, and then the banks, the Federal Reserve shoved all of this extra cash onto the banks' balance sheets. That means that the banks, they're flush with cash. Now they can buy back their own stock, and just 3 banks are planning on buying back $17 billion worth. Well, what do the other 27 banks have in mind? Is this going to total $50 billion? Is it going to total $100 billion? Who knows? But it's going to be a whole lot more than 17, because that's what just these 3 have in mind. So it'll probably be like $30 billion total, maybe more. But this sector is probably going to get lifted, and that will probably cause the entire stock market to be lifted up a little bit. But they can't prevent a recession forever. So one of these days you're going to see the stock market start to fall, and this is going to be deflationary. And you've seen, I wrote in my book, that investors will run toward bonds for safety as a knee-jerk reaction, and that causes the U.S. dollar to go up. Well, we've seen the dollar going up, and we've seen gold going up at the same time. These are some of the things that I predicted in my book. But, do you want to own gold and silver right now? I still buy. This video was brought to you by GoldSilver.com. I'm proud to say we've been one of the most trusted dealers for over a decade now. We have fast, free shipping and a price match guarantee. While our competitors serve you ads, we serve you education. And that's the difference with GoldSilver.com. To learn more, click the info button. Thanks.